Tell me which one is colder. The fact that they dropped CVS like a rock Monday after the market closed, or this 12-degree weather we're experiencing right now in New England. Well, we managed to squeeze out a profit out of CVS as well as final TP on WDC. I'll also cover QQQ. Welcome back to Finesse Fridays. This is where I'll break down the swing trades for the week, not only the mindset, but the discipline behind them. In our trading community, I did type in CVS so you can be able to see exactly how far back we were looking at it since 1228. Even prior, CVS has been in a amazing formation. It was just a matter of breaking above the most recent channel. So I'll say one thing for sure, timing is everything. Is so important. And with this, we had great timing. I'll show you the chart in particular. So with this week, just setting the reminders and as well as the exits, because it did run into a wall of resistance around 83, 80, 84, we were able to make some great money. This is one of our coaches, Tony, just showcasing his profits inside of the community. Before I jump into the CVS chart, let's get into the NASDAQ, ticker symbol QQQ. The NASDAQ provides endless opportunities, both going long, as in buying to profit higher, as well as going short, shorting in order to make profit as price drops. In this particular month of January, on the 11th, I wanted Qs to break out above a certain price point in order to extend and potentially retest the prior all-time highs. However, that week it wasn't ready yet. It swung right back down into formation, holding the range. Based off of Friday's strong close to swing this back up for a total of 4 days, with the same week expiration, QQQ managed to provide a 200% return based off of having the prior all-time highs retested as an exit strategy. We'll never make the assumption that we're going to make another all-time high and keep trending unless price proves itself to do just that. The exit strategy was simple as a retest and what they've shown us where they sold last time in the past. Our replay mode, you have to admit this chart breakout was simply amazing. It took a while, but the reminders help. Setting those alert above a key level help to position us to get in and profit, and just understanding not to be greedy. Now, when I hit play, this is ultimately what happened. We did not anticipate this at all. When I looked left, it was just a matter of understanding that we're nearing the last resistance point. So not only did I take profit, but also, as you've seen, members in our community took profit as well. However, those who decided to hold on for potentially more, unfortunately, they did not get more. After hours on Monday, CVS stock fell apart. It actually dropped about 14% because of the news reported on Medicare and Medicaid services. They were basically flat in terms of the payment rate increase for Medicare Advantage plans in 2027, which was far below the 4% to 6% increase that was expected by investors. CVS wasn't the only stock that got hit. There were some other insurance companies as well that also took a beating. But for us, we were fortunate to manage a profit just based off of technicals alone. WDC, it moved up and hit our final target. The reason why I want to show you why these targets and exits are important is because of earnings. Earnings did occur, and we can see that it fell apart the next day. I'll take you to Starbucks. Starbucks, it opened higher, it fell, and continued lower. Taking profits when you have them is crucial. Trading according to your plan is very important. The reason for targets, they are targets based off of a technical level. And holding through earnings without that being a part of your plan, with these charts, it shows how that can be extremely hurtful. You have Starbucks, where reporting earnings, granted, if selling into that, yes, money was still been made, but look at the follow through. WDC showed something very similar, the follow through after earnings. Generally, when we see these setups prior to earnings, we want to make sure that we're able to exit, set our exit strategy, and hit these targets before the company reports. We understand there's a 50% chance that the company may be, and the other 50% chance it will not be. So why gamble? No need to. And that's the importance of high probability trade setups and not leaving earnings be a factor to determine your outcome. Netflix was the one trade that was given this week. However, based on the open, it did not technically trigger. We have one golden rule. If we are buyers, we want to make sure price moves up and not fall down in order to trigger our buy alert. It's really that simple. We will keep Netflix on our list at that same price point. When we analyze a chart, just because the alert did not hit this week, that doesn't mean in the future price will not get there. So setting our alerts, being aware and being ready for those notifications. So once we execute, we can catch the move. Simple as that. If you want to learn more about our swing trading framework, simply look in the description, click the link, and download the framework.